Before I start final accounts, you must be aware about the format and items of the final accounts. You know, final accounts have got three parts: trading account, profit and loss account, and balance sheet. Let's talk about trading account. Whenever you write trading account, you should write down trading account for the year ending 31st March 2013. Because in this question, I'm going to take 31st March 2013 as my closing date. So it's always prepared in the T shape. Not always, basically there are different presentation of making trading account, but we will make only and only in T shape. So when you create the T, you will get the two portions, left hand side and right hand side. On left hand side, the column will be particulars, then amount, and on right hand side, particulars and amount. On debit side, first of all, at the top corner, you should write opening stock, because in this trading account, the closing date is 31st March 2013. So opening stock means stock as on 1st April 2012. That will be our opening stock. And then the next item will be two purchases. And then the next item will be two direct expenses. And on credit side, at the top, please write down by sales and then by closing stock. Closing stock means the stock as on 31st March 2013. So in this way, normally you will find that credit side of the trading account will be stronger than debit side. It's not the rule, but generally you will find it. And the gap, the balancing figures supplied on the debit side will be called to gross profit. So it's just like you can say it's a sort of ledger. You have to supply one particular amount to the weaker side and you have to make the totals equal, just like you did it in ledger posting. So that will be called our gross profit. Then number 2, profit and loss account. Profit and loss account for the year ended 31st March 2013. The format of the profit and loss account will be same as we did it in trading account. Means it will be in T shape. The gross profit you have found on the debit side of trading account, it will be transferred to the credit side of profit and loss account by gross profit, whatever you have got it from trading account. It means profit and loss account cannot be prepared without making trading account, because trading account will give us gross profit and gross profit will be transferred to profit and loss account. And on the debit side, you will write down two indirect expenses, and on credit side, you will write down by incomes. So I'm going to assume that the total of the credit side is stronger than the debit side. So on debit side, you will have to supply one more figure, which is called balancing figure, so that the totals on both sides is equal. That will be your net profit. So in this way, you can find out the net profit through profit and loss account. In our previous segments, we used to find the net profit through the formula, that was closing capital minus opening capital plus drawings minus fresh capital. So but now we are going to find the profit through profit and loss account. And after that, balance sheet is prepared. And what will be the format of balance sheet? On liability side, first of all, write down capital. The amount of capital should be in the inner column, then add net profit. And whatever you get the total, it will be taken to the outer column of balance sheet in the amount column. And otherwise, you know each and everything about the balance sheet. You have already learnt about it. So this will be the format of our final accounts. I'm not giving you full details about the final accounts because in the upcoming episodes we'll do the final accounts chapter that will be exclusively on final accounts. Then I will go into more details. At this stage I'm trying to give you the just aerial view of final accounts, means the just a touch of final accounts, not in details. One thing more, because final accounts are always prepared when the trial balance is prepared and the trial balance is balanced. I mean to say the totals on both sides are equal. So when we prepare the final accounts, we'll take all the items from the trial balance. So trial balance item will start going to the final accounts either on debit side or on credit side. So remember the principle that when we transfer the items from trial balance to final accounts, it will be one item, one hit. I mean to say the one item can go to the only one account, either trading account or profit and loss account or balance sheet. And secondly, you cannot repeat the item. For example, you are taking up some item from the trial balance. You cannot take it twice, means the same item is going to trading account and the same item is going to balance sheet, etc., etc. It's not possible. And number 3, debit item will go to the debit side and credit item will go to the credit side of final accounts. Means if you have taken any item from the debit side of trial balance, it will go to the debit side of trading account or debit side of profit and loss account or debit side of the balance sheet. Now it's a new thing for you. Debit side of balance sheet. Balance sheet doesn't have any debit side or credit side. But for the convenience of understanding this question, I will say the asset side is the debit side, because balance sheet is the statement of assets and liabilities, and assets have got debit balances. So for the convenience, I can say that asset side is the debit side of balance sheet.